the quarter, so they're taking
beat on the top line, Julia. I also see DAUs look to have exceeded expectations as well. What do you see?
That's right. A beat on the top line. The earnings number is not comparable, and daily active users better than expected. Just to go through the numbers here, revenues coming in at $32.17 billion versus estimates of $31.53 billion. What's essential here is revenue declined by about 4% from the year-ago quarter. Analysts expected revenue to decline by about 6.5%, so better revenue performance than anticipated. The daily active user numbers hitting 2 billion versus 1.99 billion estimated. So better than expected daily active user growth. Of course, in light of competition from TikTok, that was an area in focus. The company also announcing restructuring charges. So this is not a surprise considering the fact that the company did do layoffs in the quarter. So they're taking a $4.2 billion restructuring charge that's related to facilities consolidation, the layoffs, and also what they call a pivot towards a next generation data center design. They're talking about doing a data center that is going to have a better construction plan to support AI and non-AI workloads.
What's going on, everybody? Crypto Deli here, but this video is about Meta, formerly known as Facebook. And of course, you know, the earnings came out yesterday, and aftermarket and also pre-market, it is currently at 20%. And even though there are some misses that they did, overall, they did beat on earnings. And because of that, the stock is reacting bullishly to the news. And of course, Mark Zuckerberg spoke about other things that are coming to the company, with them shedding 11,000 employees, and plans for AI, data center, and all the other stuff. But is it a best? When is it time to buy, basically, right? So Meta, just like all the other stocks, have gone down and has continued to go down. But it looks like at the beginning of the year, along with the crypto market, stocks have been bullish. You look at Google, you look at Tesla, and now you're looking at Meta after their earnings call that it is going up. So let's continue to see what the analysts have to say about that.
Of course, interesting in light of the ongoing conversation about artificial intelligence. And so just to look at the operating expense, the restructuring here and the impact, the company says here that if they excluded that restructuring charge, the diluted EPS would have been $1.24 higher for the fourth quarter. And that's part of this, the comparison here. There's a lot more on Outlook, but I'll be back to you in a minute with that as well, Scott.
Let me just ask you a question, too, and forgive me for doing this on the fly. I know it's difficult as you're going through everything. It looks like the guidance on revenue is pretty decent, too. $26 to $28.5 billion for the first quarter. Street was at 27. Yep. Right. You know, the high end is obviously higher than their number was.
So yes, that's right. So they're guiding for revenue in the first quarter between 26 and 28.5 billion. That's important because remember that Snap just guided to lower first quarter revenue than analysts had been expecting. They also are in the CFO Outlook commentary here talking about how the expenses will be lower than what they had previously said. Now they're saying the full year 2023 total expenses will be in the range of 89 to 95 billion, lowered from the prior outlook of 94 to $100 billion.
Here's the statement in which he is talking about. Meta said that its headcount increased 20% year over year to 86,482 as of December 31st, 2022. That number includes a large chunk of the overall 11,000 workers, which Meta said it would lay off last November. The company expects that its total expenses in 2023 will be in the range of 89 billion to 95 billion, which is lower than its prior outlook of 94 billion to 100 billion for the year. Meta attributed the adjustment to slower anticipated growth in payroll expenses and cost of revenue. And that is basically good news for them as well. And that is good news for the stock because they're expected to spend less than anticipated. And of course, it's because of the 11,000 workers that are, that were laid off. So we'll continue to see what else that she has to say.
So really lowering the expenses there. And they're saying that they now expect to record an estimated $1 billion in restructuring charges in 2023 related to consolidating the office facilities footprint. They also lower the capital expenditures range to between 30 and 33 billion, lowered from the prior estimates of 34 to 37 billion. So while their revenue is continuing to be in the range that analysts had hoping for, they're also bringing down those expenses, and we see that is resulting in the stock popping over 13%, Scott.
Oh, I'm glad you brought that to us as well. Come back on with us the moment you have anything else. Julia, thank you. Let's bring in Meta shareholder now, Stephanie Link. She is Hightower's chief investment strategist. What's your reaction here?
Yeah, I mean, it was pretty good. I was really nervous because the stock rallied 27% year to date, and it's up 68% from the November 3rd lows. That being said, it's still down 50% from a year ago, Scott. So it still has a ways to go to catch up, and the numbers are good. You guys talked about the revenue. Revenue came basically in line on the high side of guide. So the guide was 30 to 32.5 billion. They came in at 32.17, so pretty close. DAU certainly happy. I kind of expected that, but it all has to do with expenses on this. At this company, right? We know that they are too high. They have been too high forever. So the fact is that they're lowering total expenses pretty substantially. That's actually more than I thought, to 89 to 95 billion from 94 to 100. That's pretty impressive. And of course, CapEx too. By the way, I think I saw that they also are announcing a $40 billion buyback program. So that's also pretty positive.
Here's a statement from Mark Zuckerberg. Our community continues to grow, and I'm pleased with the strong engagement across our apps. Meta CEO said in a statement, our management theme for 2023 is the year of efficiency, and we're focused on becoming a stronger and more nimble organization. So that's basically is he's having a positive outlook for the company and where they're going as a whole. And of course, that's why they also announced the $40 billion buyback that was authorized. Hopefully it will cause the stock to go up and create somewhat of a demand of the stock. And I believe that even now it's already have increased their, I guess their price tag. One analyst said they have increased it.
Was on Instagram and that had been giving them the accurate data of who you are and what you like, is only seen incredible targeting, which is what I want. I don't want to tell the system I'm 80 years old and I get a ad for a bathtub that the side of that bathtub opens. I don't need that yet. I will at some point, but I don't want to see that. So my point is, like, the initial people that were onboarding or surfing the platform, yeah, it wasn't maybe as good, but I think, look, it's only gotten better for me as a user. I think your reporter also mentioned his experience too. So those of us that have been using it are only finding what I would consider insane targeting, better targeting, and better ad placement than anyone. So if I care about the band or sports or whatever, like, that's why I'm on the platform. And there's a lot of other platforms that do not give that to you. Snap is one of them. Just the usability is just not exciting. And so I think there's a lot of other social platforms that, you know, Facebook and others have said this, that their ability and their size and their scale to fight through the Apple changes, they'll come out on the other side. It feels like we're coming out on the other side of the tunnel right now. I just don't know if we're about to go into a tunnel that's dark because advertisers now start to pull back because of the macro through this year. And that's still the big worry that we're keeping an eye on. And then again, the magnitude of the move now with the stock at 180. Now we're talking, like, you know, gains of you know, pretty much outperforming almost any tech stock year to date. That's a concern, you know, the magnitude of this move.